Hey everyone, welcome back to Financial Freedom Friday, where we discuss tips and strategies on how you can help build financial freedom, achieve it, whatever it is to you. I'm Nate. It's great to be back. Today we're going to talk about something very important to us at Living Wealth, and that's how to keep the money in the family. If you've been around us, you've probably heard us say this before, how to keep the money in the family. I want to ask you a question. Have you ever realized how much money is leaving your family to third-party financial institutions right now? I mean, if you're married with 3 kids, you can take a look at your own car payments, your own mortgages, your own credit cards, but presumably you've got your children growing up and they'll have very soon their own car payments and student debt, like mad these days, and mortgages, credit card debt. And so those things added together can easily top $10,000 or more a month in payments that are leaving your hands, that are leaving your kids' hands. And what we want to do, and this is why we feel it's so important to keep money in the family, we want to see if there's a way, and we've seen many matriarchs and patriarchs of families be able to bring the family back together and start recapturing all the money that's currently leaving to third parties for all those different types of notes. And what's amazing is that if you can bring a family back to work together, you guys won't have to worry about whether the stock market's going to go up, because you guys can build wealth as a family working together and keeping just by simply keeping the payments in the family. And so not only will your kids paying mom and dad back for the loans help build their wealth, but it can also build your children's wealth, because who's going to get the money when the parents pass away? So not only will those repayments stay in the family and help build wealth for the parents, they can live on it, but also will pass down. And so I ran some calculations of my own for my own family. I'm young. I've got a young family. They don't have any debt yet, being 2 years old and 6 months old. So not even 2 years old, but he acts like a 2-year-old. And my wife and I, we don't know how many kids we're going to have, but we like kids, especially my wife. You can ask her. And so we don't know how many we'll have, but let's just say 6. We may get burnt out before then. Maybe we'll keep on going. I really don't know. But I ran some numbers assuming I had 6 kids. And 30 years from now, many of them will be graduating from college. They'll be starting their careers. They'll be doing, if they go to college, I'm not saying they have to, but they'll be needing mortgages. So I just say, on 6 kids, easily 30 years from now, that could be $2 million in mortgages that people are going to that they'll have. And I want to be able to own all of their mortgages. And so I just ran some numbers. I said, okay, let's say I find it's $2 million in mortgages 30 years from now. My whole goal is to build that up. So I've got that. That's over actually $12,000 a month coming back. That would just leave the family on those mortgages, that comes back into the family for 30 years, 360 months, where I will receive $12,000 each and every month. And if I don't just let that sit somewhere else, in a bank account or something, if I run that back through the policies that I have, which is what I use to build wealth, is these infinite banking policies, and that's where all the money's going to come from to finance the mortgage. If I flow that money back into the policies, that's going to accumulate over $9 million. So I can turn $2 million in mortgages into $9 million inside my policies just by recapturing those payments over a 30-year time frame. The death benefit is going to be much higher than that. I mean, on $9 million, I could be pulling out $400,000 a year tax-free very easily with that. I didn't have to leave the family and go find other places to work. I could just simply keep the money in the family. I don't have to worry about the stock market. Don't have to really take very much risk at all. At least it's just family risk, and I'm willing to accept that. And I can create an enormous amount of wealth just from banking and keeping the money in the family. We'd love to share with you how you could do this, because it's a passion of ours to see families come back together and work together to build wealth with no risk or very little risk at all. So it's a great way to build financial freedom. It's just the loans that your family members already have, bringing them back in and keeping them in-house. And remember, guys, if you don't work towards building your financial freedom, nobody will. So let's get at it. We'll see you next week on Friday.